Hey folks, Dan Frio here, the rate update. Today is July 22nd, 2021. Employment numbers came out, or unemployment numbers came out today. Home sales that are going to be surprising. And what happened to real estate or the interest rates today? We're going to find that out all next. So don't go away. We'll be right back. All right, so what we talk about here is real estate. And we have a lot of followers that way, and they want to know, what's going on with home sales and what's going on with home values and what's going on with, mortgage rates. So that's what we try to untackle every day. And so today we're going to talk about some of the headlines, and then I'm going to give you my opinion on why some things are happening. Then we're going to get to mortgage rates and see where those headed for today. So the first thing that I follow is, and I try to post this on the YouTube platform every day, but it says, let's go through the highlights, and I'll post this YouTube or this newsletter out to all my social media here as soon as we're done recording. But delinquencies on mortgages are down. Mortgage rates are getting really good or better than they've been in the last few months. We're all the way back to where we were in February. But then you also see existing home sales rise slightly for the first time in 4 months. And you're probably saying, well, wait a second, home sales are going nuts. No, it's values are going nuts. Home sales are way down because there's no inventory. So check out this video real quick from CNBC, and then we'll be right back to untackle the rest of this puzzle.
Existing home sales also out for the month of June, but for that, we head east to Diana Olin. Diana?
Rick, existing home sales in June up 1.4% month to month to a seasonally adjusted annualized rate of 5.86 million units. That's a slight miss. The street was looking for a little higher, and May's numbers were actually revised slightly lower. Now, the headline in this report, though, is that we may have turned a quarter on inventory. Inventory, 1.25 million units for sale. That's down 18.8% year over year, but it represents a 2.6 month supply at the current sales pace. Last month, we had a 2.5 month supply, and we are seeing the inventory declines decreasing. So inventory getting slightly better, still very low, though, pushing prices higher to an all-time high yet again, $363,300. The median price of an existing home sold in June, that's up 23.4% year over year. But again, that's due to what's selling. Sales of homes priced between $100,000 and $250,000, down 16%. $1 million home sales up 147%. And one last thing, investors getting heavier into the market. 14% of sales to investors. That's up from 9% a year ago. And all cash, also 23% up from 16%.
Okay, so here's that headline. So that was great information that we got. One of the things I wanted to explain to everybody is, why houses or home sales are down, because we're all expecting, aren't they way up? No, values are way up. Home sales are down. And why? So basically, let me do some explanations for you. Number of homes sold in the USA. You can look, see, we had a nice little rally up through here, okay? Then all of a sudden, look at this drop off. So let's say you take off that drop off. Where would this chart put us if we charted this thing through? Up here, right here, basically kind of where we are to a point. Maybe you should be up in this range here. If you kept going the averages, let's even add that into the peak, or that in, we should be right about here. And that's where we are. So everybody's saying, things are going nuts. Not really in home sales, in home values. So that's kind of the scary part of some of this. And you go down to, and I can show that to you or prove that to you as well. Here's the inventory. So look what we've seen. The lowest inventory that we've had since we've recorded this information. So why is the inventory so bad? Well, think about it. You just came off of a pandemic. That pandemic, a lot of people lost their jobs. A lot of people were out of work, but a lot of people entered into what's called a forbearance program. So what the forbearance program is, those that have not or don't own a home or have never owned a house, back a part of the CARES Act back in, I think it was like April of 2020, the government and the banks kind of got together and they said, we need to come up with a plan to make sure that we don't have the repeat of 2006. Everybody says, oh, see guys, here's what's happening. It's 2006 all over again. It's not. And here's why. people want to buy houses. There's just nothing for sale. So let's retract that back. Why is there nothing for sale? One of the biggest reasons is there's over 2 million people still in a forbearance program. What is the forbearance program? Basically, it's allowing you, the homeowner, to postpone mortgage payments. Starting back in March of 2020, they've extended that all the way through, in some cases, September 1st of 2021. So just think of it. You're the homeowner, and back last year they came out and said, well, you don't have to prove anything, but you can postpone making mortgage payments and just add those to the back of your loan. So you said, okay, I'll do that. I don't have to worry about it. So now it's like, I'd really like to move though, but think it through. You don't have to make a mortgage payment in your current situation. So if you were to sell and buy a new house, you get a new mortgage that you'd have to start making mortgage payments on. So would I rather just hold off for now and not buy another house until my forbearance is over? There's 2 million people still in the program. So you can see, we're down the shortage in the inventory. Let's check at our chart. How much short are we in inventory? Well, if we just take an average, let's just say through here, there should be about, we'll go right through here in the average, right in the middle, 2.5 million homes for sale. Where are we? 1.2. We're 1 million houses short of being sold. Well, there's 2 million people in forbearance. So if half of them decided they want to sell their house, we'd be back up to normal levels. So what is pushing the house values up to these crazy levels? I agree they're crazy. Well, it's supply demand. When you have low supply and still the same amount of demand, it pushes up prices. That's the biggest reason for the price increases. There is no supply, okay? And all that is substantiated right here. Yes, mortgage rates help, but they're not, if you don't want to buy a house or can't afford to buy a house, you're not going to buy a house. So I am saying it's an inventory shortage issue, and the biggest proponent of that is the forbearance, because we can show we're about 1 million houses short of being on the market, and there's 2 million people in the forbearance program. So that's that part of the equation. So now other parts of this equation for the housing market is how many people are working? Well, let's go to the employment numbers or the unemployment numbers. We go through here. Initial jobless claims they came in for the week ending July 17th, 419,000 people. Guys, there's still, and I'll post this when the JOLT index comes out. There's a JOLT index that I compare this to. There's over 9.2 million job openings that are being hard to fill. So why people are still getting let go, I don't know. And if you have any comments there, please, leave them down below. I answer most things, but put constructive data down there and let me analyze it, and we can bring those points up. But there's still a ton of people not working. Okay, continued jobless claims have basically started to stagnate. All right, and the numbers are starting to get a little more positive. Okay, so here's my analysis behind all this, and I keep saying it. Please check out my videos from the past. The CARES Act was hugely beneficial. I'm not doubting that, and millions of people it helped, it saved them. But if you're not making a mortgage payment, you're not making student loan payments, and you're making excess money on unemployment, the unemployment benefits, you're not going to sell your house because then you'll have a mortgage payment, okay? And you're going to try to maybe postpone putting off going back to work as long as you can if the government stimulus is paying you more than you were when you were working. For example, if you work in restaurants and hotels and things like that, if you were possibly making minimum wage and living off of tips and other things, the stimulus package or the CARES Act is paying you more than you were making. And so you can stay at home, maybe even contract and have somebody pay you cash and still get the unemployment benefits. There's probably a lot of people out there that this is hitting home. So, and some people are going to argue with me, but everybody's entitled to their own opinion. So now let's go on to that. That basically is talking about the housing market, the employment numbers, and what I see on the housing front. Here's what I see: housing. When the forbearance stops, September, You're going to have the dust settle for probably 2-3 months. Then you're going to get in the holidays. A lot of people are going to postpone things then. I think next year is going to be completely bonkers when it comes to buying houses. So if you're saying, hey, I'm going to wait till next year to buy, rates might be higher, prices might be higher. So is it beneficial to hold off? So that's only, you guys can only decide that part of it. So now let's get on to what mortgage rates are doing. And I apologize, I missed yesterday. I was at it, like I said, I was meeting with Century 21 in Rockford, Century 21 affiliated. Great group of people, and I'm going to have them on future YouTube videos. But I missed this debacle right here, and I'm glad I did. But to show you where we are today, we're up 19 basis points. So what does that mean? So, basically, okay, Dan, you're showing me this number, but what is this? Okay, what we follow every day on the channel is what's happening with mortgage rates. The biggest component of the mortgage rate, or the biggest factor involved, is what's happening with the MBS market. MBS stands for mortgage-backed securities. Okay, it's a bond that trades on Wall Street that's yield is tied to your mortgage rate. It's not the 10-year Treasury. It's not the U.S. Treasury. It's not the Federal Reserve. They don't set mortgage rates. The biggest component of your mortgage rate is mortgage-backed securities. That's what we follow here. This is a bond that trades on Wall Street. Let me show you something about how bonds work. So bonds work this way. This is what's happening to the price of the bond, okay? And why that, look at it, it's bouncing around. You're seeing it live. So here's how this works. The more you pay for a bond, as the price goes up, the yield goes down, okay? So we love when the number's going up because it means people are paying more for the bond and driving down the yields, driving down the mortgage rate. That equates out to what I'm talking or referring to as the yield, okay? So what happened though in the past is the fear of inflation is freaking out the market, plus the fear of the Fed, what they call tapering. What tapering means is they're going to reduce the amount of mortgage-backed security bonds that they are buying. And it's just like anything else, supply, demand. The more the Federal Reserve is buying of mortgage-backed securities, they're driving up the price and down the yields. So they've been trying like heck to have stability in the market, and they do a very good job at that. But what you see, though, is every time there's a Federal Reserve meeting, everybody gets freaked out. What are they going to do? Are they going to talk tapering? Is that then going to affect the markets? Is that going to crash everything else? So you have this drop. Okay, again, remember, drop in price means up in rates. Your mortgage rate's going up. So May, during the Federal Reserve meeting, we had a crash. Okay, rates spiked. And then we went back to normal and stayed steady. Well, what happened right here? Well, the week of the Federal Reserve meeting, and it crashed the market. Same data basically came out. There was really there's no major changes in what the Fed said. But right after that, the market, it crashed, and then Federal Reserve Chairman came out and everybody started spinning it, saying, guys, we're not going to do anything until employment gets where we want it to be. We're kind of throwing the inflation index out. We're going to throw it out for now. We want to see employment numbers. And based on the employment numbers, the unemployment numbers here increased more than they thought. There is no time soon that the Federal Reserve should be jumping in, tapering their bond buying. Okay? So we had the crash, and then we had this. Every once in a while, like in here, right in here, this past week, I think it was Monday or Tuesday, the markets crashed, stock markets crashed, bond markets crashed. Everybody's fearing the worst of everything, and then all of a sudden, it's fixed. The stock market's already recovered all of its losses from last week, and we're almost basically back to where we were as well in the bond market. We're right in here. I keep saying we should be trading at the 1.8 handle right here. So I can see the mortgage-backed security market going up another 10 basis points to the 108 trigger. I won't get into the details today on why I'm thinking the 108 is the trigger, but just saying what I'm saying in a nutshell is I expect these bond prices to increase a little bit more. And again, when these go up, rates are coming down. Economic calendar basically for this week, is already baked into the cookies. There's nothing coming out tomorrow that should affect anything, so I don't expect any changes tomorrow. What happened today, we like to dissect that. Basically, all day long, we had a nice little recovery in the market, and then we just stagnated from there. What I like right here is big buying, and then sellers came into the market. That's what the red candlesticks mean. And then we had buyers coming in right at the end of the market. And I like how we're ending on an up note or ending on a green note. That means there's buyers in the market waiting, and they might have missed the buying opportunity and might carry into tomorrow. So now where are rates today? Well, let's get back to this. I post this every day. It's in a newsletter that I get from Black Knight. It is rates as of yesterday. So I get these about noon, 1 o'clock. So they're not, triggered with today's rates are, because they sent out surveys to everybody and they have to get those back. But as of yesterday, 30-year rates were this on conforming, jumbo, FHA, and VA. They're right here. Okay. How you explain this is a 1 day delta means a 1 day change. So where we were yesterday. So yesterday, if rates are up 6 basis points, that means we were at 2.98. Okay, yesterday on the 30-year conforming. That's where we were. Okay, 7 day delta means the 7 day change. So this week, rates went down 8 basis points, down 11 basis points, and so forth. What is a basis point? Like, for example, 6 basis points equals what? Well, it equals 0.06. Okay, so that's right over here. Okay, so if you were 0.04, if we took that off, that would be 4 basis points right there. I hope you get that part. That's pretty simple. Then 4-week delta, basically the 1 month change is we're seeing about 1/8 of a reduction in rates across the board. Okay, just to reference, these are not my rates. These are the national averages. Every Tuesday, I try to post what my rates are. I pick a category, and then I go out to the web and pick a bunch of different companies to check mine against. This week was jumbos. Didn't have a lot of people viewing those for some reason because we get a lot of jumbo loans, but my rates were smoking everybody. So if you'd like to find out more about me and my team, please visit therateupdate.com. How you get a hold of us is you can give us a call at 844-775-LOAN. You can schedule a meeting. Nico's my assistant. If you'd like to apply now, you're probably going to just get a blank screen here. There's going to be just apply now, but Nico is my assistant. So if you'd like to apply with me, just click there and you can get the ball rolling. Over through here, if you're looking to buy a house or refinance, what this does, it'll ask you about 10, 18 questions. And the answers to those questions are going to help us fit you into the program that is right for you. I had a video recently that I did, an FHA loan versus a conventional loan for someone that would qualify for both, and how much, I'll say it this way, how they were taken advantage of by putting them into an FHA loan when they qualified for a conventional loan. I go over that, how that cost them over $30,000 more over the term of that loan than they didn't have to pay. So that's one reason why, a lot of people reach out to us. They like what we do, how we do it, and so forth. So if you want to schedule a meeting, a lot of people do that with us. They just click here. It'll send you out to our calendar, and you can pick a day and time that's accessible to you. You can do it by Zoom or phone call, and however you set it up, we will be calling you or Zooming you in on that day at that time. So that's it for today, guys. Thank you so much, and I will be seeing you tomorrow, God willing. Take care. Have a great night.